So I recently met with a business owner who has done an S Corp election, and the reason she wanted to meet with me was because she had some bills to pay and had recently discovered that as an S Corp, she was supposed to be paying herself a W-2 salary. So once she found out that she was supposed to be paying this W-2 salary to herself, she quit paying herself distributions and now needed money to pay her bills. So she was very, very frantic and wanted to meet with me to discuss payroll. My name is Christina Haganey. I'm the president of Valor Payroll Solutions, and we help small business owners with their payroll. So the first thing I said to her was, go pay yourself. You don't have to set up payroll to pay yourself. And we hear this a lot from business owners who have done an S Corp election, because what we find is that often the business owner's accountant or CPA recommends that they do this S Corp election for the tax benefits. But it's not always relayed to the business owner the other requirements or any requirements sometimes for the S Corp election. And of course, one of the big requirements of the S Corp election is that the owner is required to pay themselves a reasonable W-2 wage. Now, where people get lost, in addition to having to set up payroll for themselves, is that they can still take distributions. The benefit of the S Corp is that the net business income is not subject to self-employment tax. So when you are an LLC and have not done an S Corp election, whatever your business makes at the end of the year, so total profit, gross profit minus expenses, the net, that is going to be subject to 15.3% self-employment tax. When you do the S Corp election, the reason you are required to pay yourself a reasonable W-2 wage is because you're no longer paying the self-employment tax. Instead, you will pay Social Security and Medicare tax, and half will come out from your check as the employee, and the other half will be paid as an employer expense. So the cumulative total of the Social Security and Medicare that will be paid on your W-2 wage is, you guessed it, 15.3%. So what happens is, say your business makes $100,000 and you've done the S Corp election, and now you're going to split that and do $50,000 in W-2 wages and $50,000 remaining distributions. With that $50,000 W-2 wage, as the employee, you will see Social Security come out of your check, which is 6.2%, and you will see Medicare come out of your check, which is 1.45%, 7.65% coming out of your check. Then on the employer tax side, you will see those same amounts, 6.2% for Social, 1.45% for Medicare, but now that other half is an employer expense, business expense. So now instead of paying 15.3% on $100,000, you're only paying 15.3% on $50,000. So depending on how much money your business makes, this can be significant tax savings. But payroll isn't the only requirement of the S Corp election. So make sure that if you have been advised to do the S Corp election, that you are aware of all of the requirements, which of course includes payroll for the owner, but also there are other requirements that I won't get into today because we're going to talk about payroll. So going back, my client, now client, we had a conversation and she was just really, really stressed out. She didn't know what to do. She had been an S Corp already for several years, but was not aware of the requirement that she pay herself a W-2 wage. So once she found that out, she really wanted to do it the right way, but didn't understand that she was still allowed to take those distributions. So we had a quick conversation, was able to explain to her, the ins and outs of the S Corp as it relates to payroll, and let her know that she could still take those distributions and get her bills paid, and that there really wasn't necessarily a rush to set up payroll if it was only for the intent of, getting herself paid. Another thing that we run across a lot when setting up payroll for S Corp owners is what they decide to do for federal and state income withholding. Even though you don't have to pay self-employment tax, you still have to pay federal and state income tax on your net business income and your W-2 wage. So what happens is a lot of times we'll see S Corp owners put most, if not all, of their W-2 check toward federal and or state income tax, which then relieves them from having to make the estimated tax payments throughout the year. Now, I'm not a tax professional, and I'm not saying that if you are doing payroll for yourself that you don't have to make estimated tax payments. But because the owner, again, is still allowed to take those distributions, instead of relying on that W-2 wage as their money that they're living off of, they instead will just put that mostly, if not all, to federal and or state withholding. And now they are sending more money to the tax agencies throughout the year without them having to actually do anything. They're being compliant with doing the payroll for themselves. So it's a really good idea if you have been advised by somebody to do the S Corp election, to do a little bit of research and make sure that you're aware of the requirements and following the requirements, because at the end of the day, you don't want to lose your S Corp status. So if you have questions about the payroll piece of being an S Corp owner, even if that just means what does that look like as far as taxes that I will pay, payroll service fees, we're always here to help and happy to answer any questions that you have. There's honestly nothing better than being able to meet with another business owner and give them some peace of mind and get them on their way to compliance. As always, if you have questions, feel free to drop them below, or you can always find us online at valorpayrollsolutions.com.